Welcome back to TyNance, another week in the stock market. Let's briefly go over the quarterly earnings from four of my companies that came out this week. First, let's get into Tesla. Tesla stock jumped 18% this week, and if you see a jump of 18% in the stock, you would think they have posted great earnings. But that is not true at all. Tesla's revenues are declining, and their net income was down even worse than their revenues. So why did the stock jump 18%, you might ask? Well, there's a few reasons for that. First off, all the bad news was already priced in, so the stock already dropped a lot before earnings or going into earnings. Second, Musk promised to investors that he will be allocating way more of his time into the company, into Tesla, and less into the Department of Government Efficiency. Another thing is, or additionally, investors cheer the Department of Transportation's relaxation of rules on self-driving vehicles through a new framework that aims to cut red tape and move towards a single national standard for self-driving vehicles. Now, there's a lot of hard terms in this, but basically it means that Tesla will have an easier time bringing their robo-taxis to markets. So this is seen as a positive catalyst for Tesla. And because of those reasons, the stock jumped 18% this week. But because the results were really bad, and we just have to believe on Musk's promise that he will be spending way more time into Tesla, there's still a lot of uncertainty, and they seem to run behind competition. So I do definitely not want to buy any more shares right now, especially after the stock price appreciation this week. And if the stock jumps even more and they don't show any sign of improvements, then there's a chance I will be selling out of Tesla and throw my money or put the money into a company that actually has a full-time CEO at the company. Next up, we have Enphase Energy. Enphase dropped about 14% on their earnings report, which showed a small miss on revenues, on EPS, and also on gross margin. They also guided lower than expected for the next quarter, and because of tariffs, they see some declines in the gross margin. So because of this, the stock dropped even more than it already did over the past few years. I can conclude that I started buying Enphase too soon after it started falling, and I bought it back then on the growth rates they were showing back then a few years ago. But when interest rates started rising, Enphase was not able to keep revenues up. They even showed revenue declines. Now it did seem to stabilize, so revenue declines turned around in revenue growth, but sadly the stock price is still falling. They do make a lot of, or actually some good profits now, so I'm not worried about the financial strength or position of this company at the moment. Do I want to buy more Enphase? There's a chance I will to lower my average price on the stock, because that's now at about $105 and the stock is now at about $45. So it's very easy for me to get my average down, of course. But I do not want to make this a large position, even though I do think that solar still has a lot of opportunity in the near future, especially when interest rates come down even further. Next up, we have Pepsico. Pepsico stock dropped about 6% on earnings as they lowered guidance, and also the results for this quarter were not that great. They blamed this on tariffs and on softening in consumer demand. I don't think PepsiCo is going anywhere, even though they are facing some short-term headwinds. But if you look at their valuation compared to their peers and compared to the history of the company, It is quite low at the moment, and their dividend yield is about 4%, so they are paying out a hefty dividend. And I truly like to buy some more PepsiCo and lower my cost basis on this stock. But because the market has fallen, there are a lot of growth stocks and nicer opportunities that I also want to add on. So I am not sure if I will be able to pick up some more PepsiCo at this price. Lastly, we have Alphabet. Alphabet jumped about 1.5% on their earnings report. The stock or the company showed resilience in revenue growth in every part of the business. So in search, YouTube, the cloud business that was accelerating in revenue growth. They also show that Waymo now offers 250,000 rides a week already, which is 5x the amount of a year ago. They announced a buyback plan of $70 billion and they increased their dividend by 5%. So everything is looking really good for Alphabet. And I was kind of surprised to see the stock up only 1.5% as the valuation came down a lot and this was a really good earnings report. So I don't mind that the stock is not going up more because I was already trying to make this one of my biggest positions. And as the stock price has came down and is now underneath my cost basis still, I would definitely like to pick up some more Alphabet. Now let's get into the results of the portfolio for this week. The portfolio had a great week and the valuation of the portfolio is now almost back at $80,000, which is great to see. The market is stabilizing and it seems that as long as we do not get any negative catalyst or black swan event, it could very well be that we've hit a bottom and that we will only be going up from now, but we'll have to wait and see. Looking to my portfolio, I bought one share of LVMH, which is the only change I've made in the portfolio this week. And as you can see, Palantir surpassed Meta Platforms as the largest position in my portfolio. And Meta was my biggest position for a few years. So this is the first time in a few years' time that I have a new biggest position, and that's mainly because Palantir stock price surged. That's it for today. Please note that this is not financial advice. You can find the full disclaimer in the description. Please like, subscribe, and thank you for watching.